I'm more optimistic.
Okay.
I'm going to turn it around a little bit. I'm not pessimistic about China longer run because I think, they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in.
We've been talking a lot about Chinese stocks and you getting back into it. Talk to us a little bit about your thinking right here, because it was just last month that you pulled back on your exposure and were selling. What changed?
Sure. Yes. So thank you for inviting me, Carol.
Yeah.
Very happy to be with you again. So we had been pulling out of China. We started last November, actually, after the debacle around the Ant Group IPO and really the banishment, it seems, of Jack Ma. And we saw increasing signs that the government was going to get tough on companies. We didn't know and companies which were more than unicorns. They had exploded onto the scene, and they had become so powerful, as had their leaders, that they almost seemed to be threatening the government. At least that seemed to be our take on the government's response. So we were a bit cautious, pulled away, and in fact, our flagship fund has moved out of most Chinese stocks. I think we were out probably late April, late May, somewhere around there. It might have been a little bit later. Gradually, you never know 100% of the time. I think the online education, really nationalization there, was a real valuation killer for the market. So I think that the market's going to be under pressure from a valuation point of view for a long time now, because that sort of thing was so unexpected. Even from those of us who saw the government tightening its grip on the country. But what we have done, we did after this last bloodbath in the stocks, we did try and sort through, okay, which companies are doing things the government likes.
Right.
And what we're seeing are those that are catering to tier 3, tier 4 cities, logistics, groceries. So you've seen us buy JD.com. JD Logistics is a big part of JD.com. I think they own 70% of it. So that's probably been our biggest purchase, as well as some Pinduoduo for the same reason. But if you were to look at what we were doing in those portfolios, we were really swapping them out of other names that we think are going to be continue to be in harm's way, or certainly under government pressure, like the Alibabas, for example.
Which you've been selling, correct?
Yes.
So in terms of the recent crackdowns, Cathie, that we've seen, does it longer term generally make you more pessimistic or optimistic about investing in Chinese stocks? What's the call here? You're a longer term investor. So what's the longer term play here?
Well, if you think about what China is doing, they're doing many of the same things our own government and other governments around the world are doing. Most governments are concerned about data privacy, national security, and even concerned in some ways about the impact of social media on students and so forth. So, but we just haven't. We don't have the kind of centrally controlled government that can, wipe those activities and risks off the face of the earth as much as possible. That's just not who we are. We do know that China wants to be number one in the world. And economically, certainly. And one of the ways they want to do it is with innovation, with technology. They want to bring more of it back into their country, certainly the manufacturing side, semiconductors being one of the most important areas in which they're investing. They haven't gotten it right. I've watched them invest in semiconductors since the early 90s.
Right.
And where they brought in a lot of Taiwan semiconductor talent, and they just haven't been able to crack the code.
Cathie, they don't want to alienate, though, global investors, do they? Or how important is it that global investors stay invested in those Chinese stocks and companies?
Well, one of the things we've been learning is, as Chinese citizens have gone out into the rest of the world, they've actually come back many times when they come to New York City or other places in the world where the infrastructure is in need of an overhaul. They'll go back to their country and say, hey, we have it pretty good here. I've heard that from a number of younger people. And so I think China has been able to stir up a little bit more of a nationalistic, hey, we have it kind of good here. And at the same time, there is the risk of social unrest because of the rich and the not so rich, or the outright poor. So they are definitely focused on that. The last thing, the biggest risk China would have on its hands, I think, is a revolution, and it could be around that. I think that's why it's stepped on this kind of mega cap stock as aggressively as it has. It realized it had just mushroomed, gotten out of control, certainly government control, and now they're coming back in to exert a little control.
So more pessimistic about China long term, or more optimistic?
I'm more optimistic.
Okay.
I'm going to turn it around a little bit. I'm not pessimistic about China longer run because I think, they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in, but I don't think the government wants to stop growth and progress at all. What I will say, though, is I'm a little more optimistic about the United States and other economies, so it's more of a relative sort of thing. The more insular China becomes, actually, the less competitive in many ways it will be, because artificial intelligence, sure, you can have all kinds of data about your own population, China or Chinese government, but in order to compete in the world, you're going to need information everywhere, and I think governments around the world are a little suspicious of what is happening now in China.
What do you think the investment environment will look like in China in 5 years from now compared to what we're seeing today? And because investors, everyone follows what you're doing. So are you positioning for the 5 years from now?
Sure. We have a 5-year investment time horizon. I think we're consolidating into the few names, and these are not in our flagship fund. These are in other of our more specialized funds. So we're consolidating our position. So we've taken it down, continued to take it down, but consolidating more towards with higher positions in names like I described. They're, really focused on tier 3, tier 4, groceries, logistics, manufacturing in China. So we'll stick with those while we wait and see, how the government wants to play this. If you think about it, one of the reasons this may be going on now is China saw what the Trump administration was like, and the Biden administration has been just as tough in some ways, but perhaps not as tough as a more conservative or hawkish administration would have been around Hong Kong. And so we've got the midterm elections in November next year. So this is their window to do what they want to do, because I do believe they're feeling like this is a little bit of a window, and if the more hawkish administration gets in later, then they will want to have done whatever it is.
That makes sense. Hey, one more question on China. Our Ben Bain, who follows the SEC, sitting down with Gary Gensler, chair of the Securities and Exchange Commission here in the U.S., and he is coming out with the SEC demanding all Chinese firms reveal more about investor risks. Basically, they're looking for transparency, and this requirement applies to companies already trading here in the United States. What are your thoughts about this? Good step? Is it going far enough? I mean, Chinese companies haven't been great on complying with kind of opening up things for the past 2 decades. What does it need to change? Have we been too patient already?
I think there's been so much opportunity in China from such a low base that a lot of investors took more risks when we were at a lower base and the growth was going to be explosive, and they were willing to do that. But I do believe with investor feedback that the SEC is saying, wait a minute, this is a more mature economy. Transparency is becoming more important now. The growth is not going to cover all sins, right? It isn't as explosive anymore. And I actually think it's a very good move. I don't know if China is going to comply, which means within, I think it's a 3-year time frame,
right.
Companies here would have to delist. So that is a risk, and we are thinking about that as well.